name is Sukh Chamdal, CEO and founder of Cake Box. I'll be talking you through the group's half-year results. Today, I'm joined by Botha, our CFO, who will cover the detailed financials. After Michael has concluded, I will then provide an update on our strategic and operational progress, recapping on what we've covered at our recent capital markets event before finishing with a summary of current trading and our outlook for the full year. So we are pleased with our strong performance in the first half of the year, generating strong growth access across key financial metrics. This was underpinned by further improved trading momentum from H2 2023 into H1 2024, which increased like-for-like franchise store sales, as well as ongoing focus on cost discipline, which enabled us to manage well-documented inflationary pressures. What this added up to was growth in our revenues, gross margin, and consequently profits, with strong cash generation enabling us to gain increased dividend payments to our shareholders. At the same time, the strategic initiatives we talked about at the full years in June and more recently our CMD last month are delivering benefits to the Cake Box. I'll talk more about those later. So overall, we're happy with what we've achieved in the first half and look ahead with confidence despite the economic challenge backdrop in Cake Box franchise proposition, growth strategy, and long-term prospects. I'll hand over to Mike now to take you through your financials.
Right, thank you very much, Sukh. So this slide just gives us a summary of all our main financial metrics, which I'll now go into much more detail. So if you can just flip to the next slide, please. So in terms of our sales, which is the Cake Box sales, the group sales were up 10.7%. So we ended up at 38.5 million versus 34.8 million for the first half versus the prior year. Our own Cake Box sales were up 6.8% at 18 million versus 16.8 for the previous year. In terms of net cash, that was up 41.8% year on year. So we ended with 5.9 million of net cash versus 4.2 million. So in terms of our dividend per share and our earnings per share, so our dividend per share grew 10.5% year on year, and our earnings per share grew 19.6%. And our free cash flow improved dramatically, where we had our free cash flow conversion of 90.2% for the first half versus 55.3% for the previous year. And that was due to us spending 900,000 less capex year on year. If we just look a bit further into the year-on-year sales performance, so our franchisee total sales, which are up 10.7%, we can see the actual store sales up 13%, and the kiosk sales were down 14.5%. Now, our kiosk sales are, we look at the kiosks as very much opportunistic. Many of them are with Asda, which has had its own issues. And we'll see if there are opportunities which are viable, we'll take them. Some opportunities which we hold for 6 months, we will close. But again, they're very opportunistic in terms of kiosk sales. Our sales, Cake Box sales, we can see were up 6.8%. Now, the difference between our franchisee sales being 10.7% and ours 6.8% is that our franchisee sales grew by 6.2% like-for-like, which predominantly was price related. Our gross margin was up 1.9 percentage points from 47.7 to 49.6. This improvement is a continuation of what we saw in half 2 in 23, where our margin increased to 49.4. So we've seen another 20 bips increase in the 6 months of the new year. And this is mainly driven by stabilizing in food costs. Our fresh cream prices have come down, but we passed some of that benefit on to the franchisee, but we were also able to reinstate our margins on the fresh cream that we sold to franchisees. So this is just a summary of our franchise sales performance, where we can see 1.9 million of the 3.7 million increase year on year coming from existing stores, which is the like-for-likes. New stores, which are stores which have opened in the last 18 months, generated 2.2 million in sales, and kiosks were down 400,000. Our like-for-like sales, we can see how that has improved since the first half of 2023 financial year, where we were down 1.6 percentage points. The second half, we benefited from positive like-for-likes of 3.4, and then this year, half year of the new financial year, we were up 6.2% in total. Now, online sales, we can see a really dramatic increase year on year of 15.1%, which is predominantly driven by our further investment in our online marketing. So not only have we've grown the sales, we've also grown in terms of the percentage of our online sales of overall sales, which is now 21.3 versus 20.9 in the first half of 2023 and 20.6 in the second half. The bar graph, the line graph, apologies, on the right-hand side, we can see that the purple line, which is this year, very consistently above the prior year, and very consistent month on month in terms of our sales being generated from our website. So if we just look a bit further of how our group EBITDA has increased by 10.4% year on year, this has come predominantly from our increase in gross profit, which has increased by 11%, which is higher than our sales increase of 6.8%, and higher than our overheads increase of 8.8%, which is largely planned overhead increase, which is an analyzation of new heads which came into the business during the prior year. Our adjusted EBITDA was up 10.4%. Our depreciation and amortization was favorable by 100,000 year on year, and that's mainly due to us having some assets which we had depreciated fully, but on review had seen that their useful lives, we had to adjust the depreciation as we could still use them for a number of years. Finance costs were flat, which meant that actually our profit before tax was up 18%, and our profit, sorry, before tax was up 18%, profit after tax up 19.6%, and our EPS up 19.6, 4.45 pence versus 3.72 pence from the prior year. Our cash flow, in terms of our free cash flow, is in line with prior year. Our EBITDA increase of 300,000 year on year was partially offset by taxation, additional 100,000 taxation charge, and although our working capital was neutral the prior year, we actually benefited from a 100,000 positive in working capital. So our free cash flow was up at 2.4 million versus 2.3, which was 5.7% up year on year. So on our net cash surplus, so this is compared to the opening net cash, which is the opening of the new financial year, was 6.1 million. We had 2.4 million of free cash flow generated, 400,000 spent on capex, and we paid our final dividend for the 2023 financial year of 2.2 million, which meant that we ended up very close to where we started off at 5.9 million of net cash. So our capital allocation policy and our priorities, we can see in the first two, further investment in the business of 250,000 in our distribution centres, which was more replacement capex, and a further 150,000 on our IT systems, which is the development of our what we call our Cake Box hub, which is our new website, our ERP system and EPOS system. Our dividend of 2.9 pence, which was a 10.5% increase year on year. And then lastly, we can see surplus cash, which at the moment we have invested on notice deposits with our corporate bankers, where we're earning just shy of 5% on those monies. Right, I'll now hand you back to Sukh for the strategic and operational update.
Thank you, Michael. Moving on to our strategic and operational update, the Cake Box business model has shown its strength in the last 6 months. If we go on to the next slide, as Michael just outlined, we achieved good growth in sales, supported by further new shop openings and our investments in serving more customers via online channels. And we're exceeding again managing our cost pressures in this high inflationary environment. On the next slide, this sales momentum can see the results at a franchisee level. And I'm particularly pleased to report we have now 46 franchisees operating more than one Cake Box store. These ambitious entrepreneurs are the lifeblood of our business. It is their success in growing their franchise store networks that underpins our own success. I know there are many who want to continue to expand this, and it gives us added confidence in our future growth. This slide shows the 5 key areas of focus in 2024. We talked about our strategy in some depth at our recent capital markets event, but I want to reiterate much of what was said. There were 5 key areas we prioritized at the start of the year to drive growth, and I'm pleased to report that we've made some progress against each of them. First, as we focused on empowering our franchisees and delivering operational excellence, we continue to deliver efficiencies that translated into a rise in our gross margin to 49.6% and an 18% increase in profit before tax. Secondly, our success in further expanding of our store estate to reach our target of 400 stores in the UK over the medium term was evident in new shop openings in new locations such as Liverpool, Cambridge and Didsbury, and we're looking at more ways than ever to support franchisee growth. Namely, through our third key focus area on data and digital, our aim to place data at the centre of our strategy has progressed considerably this half year to support our multi-channel growth, which I'll talk more about in the moment. In terms of our enhanced leadership team, Michael has made a fantastic start to life as Cake Box CFO, and the board was delighted in October to announce the appointment of Martin Blair as non-executive chairman. As we have previously announced, we are also actively recruiting another new NED to chair our audit committee. And last but no means least, supporting the communities in which you operate and remains core to Cake Box, and we'll continue to local initiatives at this time of macroeconomic and geopolitical uncertainty. So turning to one of the core areas of strategic focus, which is marketing. Bolstering our marketing capabilities is critical to our success and has been a key focus for us to look into the next phase of our growth. We've made good progress strengthening our marketing function and have invested more than ever before in our digital and e-commerce capabilities. Alongside this, we have launched both national radio and outdoor advertising campaign to build our brand nationally to help support awareness of our offer as more Cake Box stores continue to pop up in new UK locations. We recently conducted a brand awareness assessment which showed that we are in a reasonable place, but there's plenty for us to go for. To help make us ground, we've created a 2 million co-funded annual marketing fund with our franchisees, a large portion of which is being allocated for digital and social media marketing. We're also rolling out an exciting new Cake Box identity, which we'll give you a sneak preview of in a second. On the next slide, and we have a big opportunity to lure more customers by taking a multi-channel approach, as we summarize on this slide, which many of you may be familiar with. Our new website, for example, which went live in June, improves customer experiences and allows us to capture data, which allow us to gain more customers, retain them for longer, increase their lifetime value. If you want to pop in, this is the updated shop fronts. You'll be seeing very soon as our new branded identities rolled out across the UK. Returning to the theme of data and what it delivers, we are already seeing early results. The numbers and illustration on this slide showing the growth since we launched our new CRM system speaks for itself, and will continue to help us improve our engagement with our customers and ultimately drive increased sales. And under the bonnet of our business system, we have recognized that we need best-in-class technology to support our digital push. Our head of IT, Dale Lee, who was hired in the last 18 months, has years of experience building systems for some of the biggest technology companies in the world. And so we're delighted to have him and his team's expertise to ensure what we have and what we need in place. So in conclusion, we're pleased with our strong performance in the first half. The business delivered continued growth across key financial metrics, while simultaneously making good progress across a number of key strategic growth initiatives. All the while, the benefits of our model remains as a highly cash generative business with a strong balance sheet. Since the start of the second half, we've seen trading momentum continue with total franchise sales growth up 5.1% in October 2024, and therefore on track to meet market expectations for the full year. Looking further ahead, we remain confident in continuing to grow the business and deliver against our strategic objectives. Thank you, everybody, for your time listening to us today.
Starting off, well, I'm going to start off with one for me, if that's okay. So, with the cost of living crisis, one might have expected to see more challenging conditions for you. And you talk about store openings, increasing sales. It looks very positive. How is it, or why do you think you've been resistant in this cost of living crisis time?
We were born at the height of the recession in 2018. We've weathered up downs, down ups, recessions, etc. Year 2022 was an unprecedented 5 simultaneous assault on the cost of living, inflation, or utility prices, the war in Ukraine, which was a blip. And what we find now, what I term a normal crisis, which is the cost of a mortgage, the interest rates. And what happens is the customer, the consumer consolidates. They will cut down on dry cleaning, restaurant visits, takeaways. But that one, like in the year where there's a birthday or an anniversary, they'll concentrate, spend a couple more pounds on that and make sure they enjoy that occasion. And that's where we're there for. And that is the driving factor for us for doing so well, because now customers are consolidating their spending and they know where they are.
And next up, are there any competitors in the UK similar to Cake Box?
We have mother and or mums and pops or 1 or 2 branches. We've got a couple of chains which are 24 strong and 26 strong. In the 15 years we've been operating, we've closed about 4 shops. They've closed 4 in the last 2 years. And so it's a very challenging environment for any new upstart. We've got the product, we've got the reputation, we've got the customer service. And I believe, that we're much, much stronger in the market than anybody out there.
Next one, how does Cake Box see its business developing with a trend towards lower carb foods and healthier eating?
Again, when it's a treat, when there's an occasion, all health considerations go out the window. So I've been to birthday parties where someone I know is diabetic, but I still consume a whole slice of cake because it's a one-off.
Very good. Are all the stores retail store outlets, or do you have dining in stores as well? If not, would you look to have kind of cafe environments?
No, what it is, Cake Box is there for cakes. It's there for occasions. It's a care for the birthday, anniversary. We don't want to confuse the article. What we do is cakes, and more cakes. Or there's plenty of coffee shops out there. Let them fight between themselves. We want to serve the customer, give them the best birthday cake, the best anniversary cake, the best occasion cake. And so when you think of Cake Box, you think of cake. You don't think of coffee. You don't think of burgers. You don't think of sandwiches.
And the next question comes back again to kind of cost of living, I guess, to a degree, or market outlook. And the franchise costs, the cost of the franchisee, has that changed at all? Are you more expensive? Are you cheaper? And for someone wanting to open a franchise? Again,
we're very reasonably priced at £160,000 plus that as a turnkey package. But we're very honest, so we give you the price of everything. Other franchise operators will say, "Oh, this how much the franchise costs," and then add on initial product stock, training, design, planning, etc. But we give a full, complete price at the beginning, and so we're very clear, and so that the potential franchisee knows where they stand. And we were proud to say we've got 47 deposits still in our pipeline, so it shows the confidence that the potential franchisee has in the business that we have.
And you still see the same number of kind of potential franchisee operators, those kind of initial conversations, there are still people willing to take a risk and open a business?
Absolutely. The programs have just shifted slightly. And so what it is, with the high interest rates, they're borrowing less and putting more equity in from their own pocket. And but it shows that there's still so much confidence in our concept and in the earnings potential of a shop of ours.
Next question, slightly different one. Are you impacted by Christmas? Do you do better over the festive season, or is it important for you?
We know we are not a seasonal business. We know all the peaks up front. It starts with Valentine's Day, then goes into Mother's Day, then Easter, all the half-term holidays, the 2 Eids, And then we've got the summer holidays, we've got Diwali, we've got Christmas, we've got New Year's Eve. And so all the celebrations are geared to all these peak periods. It used to be Christmas Day, used to be the busiest day, but now it's New Year's Eve. And everybody's now bringing in the new year with a fresh cream cake. And so for us, we get these peaks, but we're not seasonal, so we've got business all through the year.
And question about Asda, and I think this one for me, I think I read that Asda's taken over Leon in the last week, and they have concessions, they have kiosks, they have concessions in stores, and have takeover targets, potential acquisition. How's the relationship with Asda? And if you were, obviously you can't talk about something that's not happening, but if you were to be taken over, do you think it'd be someone like an Asda, or do you think it would be someone like a high street chain?
Well, we've only had one approach, and it's an open market out there. We welcome anybody putting a bid in, and it'd be assessed on its merits. But as we're doing it ourselves at the moment, I think we're doing really well. The potential for growth is there, or the earnings per share is going up, and we give very healthy dividends.
Now, one more, and then I think we're probably done, and it's about your online channel. Are the online orders fulfilled by your local franchisees, or do you deliver them centrally? Is that your business, or is it business that gets passed on to the local stores?
No, we're to the broker. So what we do, all the online comes through us, but it's passed on to the franchisee. So all the orders are fulfilled by the franchisee, all the shops.